Let's continue with the cash budget. So we did collections. Purchases is very similar. So we're going to use quarterly and annual statements to spread the purchases for the year out, and then we'll use percentages to talk about where we're buying it. In this case, we're talking most about inventory, so we're going to look at cost of goods sold as our purchases. And so I am going to go back to Edgar Online, company search, and I'm going to start pulling everything we need for the cash budget. Purchases. Let's see. Come on, computer. There we go. So I'll need the 10K, and I'll need 10K. And again, I'm doing 14. I'm kind of reshooting this a year later, so I need the February 15 first. Oh, let me open that in a new tab so we can keep working from here. New tab, and then we're going to have 10 Qs for everything else. So I'm going to go ahead and open up Q1 of 2014 right here, and then we'll open the others as we need them. Alright, so again, I just want to look at cost of goods sold and kind of spread them out for the year for our inventory purchases. Statement of income. So 3 months ended March 22nd. Cost of goods sold. So here's your cost of goods sold. You know, food and paper, payroll, occupancy for stores, and so you roll all those together and you get one number here. Company restaurant expenses $1,851, and so I'm just going to go into January and say equals 1851 divided by 3. This equals that. This equals that. And then I'm going to go get the next quarter. So Q2 is right here. Financial statement, statement of income. And they give both 3 months and 6 months ended. If they don't give you 3 months ended for June, you'll have to take 6 months ended for June here and back out the first quarter. So take 4181 minus what was the first quarter? Minus the 1851, and then divide that by 3, but not a huge deal. So 2330 is this one, so equals 2330 divided by 3 equals that, equals that. So there's our first 6 months. Then we go get the third quarter. Which is this one. And it's 2462. 2462 divided by 3 equals that, equals that. And then for the last one, we'll just go to the 10K, get the full year cost, subtract the first 9 months out, divide that by 3. So where did my 10K go? Here's my 10K. And so for the full year of 14, company expenses were right here, 9682. 9682. So I'm going to go here and I'm going to parenthesis 9682 minus the sum of the first 9 months. And then I'm going to divide that by 3. And then equals that, equals that. And then if you want to check, you just highlight the whole thing and it should come out to 9682 down here. So if you highlight that whole row. So there's our purchases, and then we just need to spread them out. So again, here when we sell stuff, we generally are taking some in cash, some we might get paid later depending on our deals. For Yum, I'm assuming most of the time when they're buying napkins and food and stuff, they pay in the next month because they're going to have a month-to-month cycle. So I'm going to say they pay 80% within the first month and then the rest in the next month. And so to do that, this is going to be backward. So here, cash comes in same time. First month means cash comes in here. So it's similar to that, only now we're paying for it. So we buy stuff here and we pay for it here and here. And so I do need the last two months of the prior year, which means I need to go back and get 2013 third quarter. So I will open the third quarter and 10K, so we can get the 9-month and 12-month and see what the last quarter looked like. So here would be the 10K. So for 9 months ended, it was 64.20. For 12 months ended, it was 95.01. So we can do 95.01 minus 64.20 divided by 3 equals that. 95.01, 64.20. 95.01, 64.20. So that looks right. Okay. And then we can just use the percentages. So again, if we buy a bunch of stuff in November, for December and parts of November, we pay 80% of it within first month. Then that got paid for last year, but the 20% we still owe from November is going to actually hit our cash budget for this year. And so we're going to need equals 20%. I'm going to lock that times November. And then the 80% again locked times the previous month. And so that's how it's going to hit our cash, and then the total payment just adds those two together. And once you have all those, you can just drag it over, and you'll see when these two are the same, this is just going to match those. These two are the same, matches it, but when we're overlapping, it's going to shift. So it'll shift how the cash hits, which is what we want in the cash budget, right? All right, now I'm going to bring down this top part down to the next section. So I'm just going to bring collections. So here's our total collections, and here's our inventory payments. So I'm just going to bring those down, and then we'll start working on these last things, all of which we can pull from our financial statements as well. So SG&A is going to be a percentage of our revenues, generally year to year, pretty consistent, hopefully. If it's not, you might have to make adjustments, but most times you go to the wired thing we did. Here's the common size income statement. You can go in there and you can find what the percentage of SG&A is. So SG&A is selling, general, and administrative. And here's our general administrative, and there's also this franchise and licensing expense that's pretty consistent. The rest of these we're probably not going to include because year to year they're going to be a little bit different. They're going to hit a little bit different because of ups and downs. So you'll see some bad years, some good years with things like these. And this is a really small piece, so I'm not going to worry about it. And so I'm just going to find the average cost of these two rows for mine. You'll have to decide what SG&A is for any company you want to do, but they should have a breakout of some sort that you can use like this. And it looks like about 12% of our revenue hits SG&A. So I need to change this to 12, and then I'm going to multiply that 12. I need to lock that. I'm going to multiply that by our revenues, since that was a common size income statement, so everything is a percent of revenues, and we get this. Okay. All right, we're about 10 minutes, so we'll call that good on this one. We have a couple more videos before we get through this, so we'll knock the rest of these out next time, and we'll start building out like our cash balances, and then there's some fun logic statements we got to do to kind of check where it'll become a self-referencing kind of model where there's different things tied up and down depending on what happens to your cash balance. So it'll get a more complex down at the bottom, but for now this will be good. We have the top half of the model done. 2 more videos and we'll probably be done with the cash budget, I would assume. So I will see you for cash budget number 3.